Hey guys, Stock Saturday, and it's a reasonably green week for me, despite sort of some fair losses in the ISA account. About 2% up this week, £3,000. So sort of keeping pace with the S&P. That's up about 2% from the looks of it. Nasdaq up about 3%, so slightly trailing that. Sort of a mixed bag really from the looks of it this week. Sort of Vale doing quite well. Broadcom down for the Friday, but that's sort of up on the week. Been a bit up and down with earnings. Yeah, but let's have a look at some news. So I didn't actually cover Aurelion Mining, one of my sort of reasonably large positions in the IG ISA, and yeah, they did sort of reasonably well. Revenue down on the Q2 and the first half of the year, but you can't really sort of focus all that much on that because it's obviously just down to the copper price. They're a sort of solely copper miner, and the copper price is down sort of 428 in Q2 last year, down to 381. But the copper production is up. 13,386 last Q2, and they're up to 14,212, and up on the year as well, sort of nearly 7% ish. And importantly, this is a great sign. All-in sustaining cost down from 333 last year to 289 for this quarter, with sort of largely lower electricity costs. So electricity cost is quite a large part of their overall costs, the all-in sustaining cost, and they're sort of making two steps towards this. So the electricity price has come down a reasonable amount in Spain and in Europe, and they're sort of securing long-term deals at these lower prices. Obviously, they could come down a bit more and they might lose out, but I think they're sort of take what you can. And they're also building a 50 megawatt solar plant, and this is sort of making reasonable headway. And they think that could generate 20, I think they said 22%, 21% of their electricity generation per year. So that would be sort of essentially, 22%. And the long-term power purchasing agreement will provide over 50% at rates below historical prices in Spain. So that's really good. So 2023 full year guidance, obviously we've already had half of the year. Production 53,000 to 55,000, which is above what they've done. So they're saying the second half of the year will be better than the first half. And all-in sustaining cost of $3 to $3.20. So they are actually predicting that to come up a little. But yeah, not too bad. And they're also making sort of reasonable headway on the Elix plant. So this is their sort of interesting bet to try and basically get more copper production. Yeah, they think this can produce higher purity copper or zinc metals on site, allowing them to achieve higher metal recoveries, lower transportation and concentrate treatment charges, and a reduced carbon footprint, which you've always got to put in there, I suppose. Some nice developments on their expansion projects, which they do kind of need because they haven't got a huge amount of mine life left. So I've been sort of comparing these, although they're sort of vastly different. I've been comparing these to KGHM, the other sort of Polish miner that I've been looking at. KGHM do about 10 times the copper of Atalaya, and they also do about over 40 million ounces of silver a year, where Atalaya don't. But they have a higher all-in sustaining cost now than Atalaya, albeit it's around about what they're saying for the year. But if they can reduce this with the solar plant and the new sort of power agreements, then yeah, I think that sort of looks pretty good. And sort of on the mine life side, KGHM are sort of completely different. One of their mines, I believe, has sort of 40 years left to run. Some of the others are sort of 25 to 30 years. So this just completely not a problem. Where Atalaya has sort of one, I think, has got about 6 years left. So they're obviously wanting to get these other projects on the go, permitted and built. So obviously there'll be a lot of capex, and it's sort of a future miner, which I guess is why they sort of trade at a lower price to earnings ratio. But yeah, KGHM sort of similarly on quite a low ratio, which I wonder if that's just because they're on the Polish stock exchange. Sort of wonder if they would maybe branch out and sort of, or whether that be an IPO on another exchange, whether they maybe get a bit more traction, or whether they just get bought up by sort of one of the bigger miners, because even though they do sort of over 500,000 ounces of copper a year, they're still only $5 billion dollar market cap. So I guess someone like, a Southern Copper or something I would have thought, easily buy them if that is allowed. But yeah, that's Atalaya at least, sort of reasonably good, and I didn't really want to sort of get rid of this being in the ISA. I can't actually buy KGHM in any of the ISAs at the moment. So yeah, we'll leave them as they are. And then Broadcom, the only other earnings that I saw this week, is sort of decent results, really. They're sort of saying that they're an AI stock, and mentioning it lots and lots and lots this quarter, driven by next generation network technologies as hyperscale customers scale out their network and network their AI clusters within data centers. So obviously Nvidia benefit from this a huge deal, but Broadcom do sort of provide components for these data centers. Well, fabless, of course. They design them and get TSMC to make them, as everyone does. That's why I hold TSMC. But yeah, decent results. 8.8 billion in revenue compared to 8.4 last year. So it's not the blowout growth of someone like Nvidia, but it's decent growth. And they're also saying 9.27 billion fourth quarter revenue growth. So pretty much all of the growth from last year to this year, they're expecting just next quarter, which is very, very good. And 65% of revenue in the fourth quarter for adjusted EBITDA. So that'd be sort of over 6 billion. Decent EBITDA growth. They've also done 2.9 million shares in buybacks in the last quarter, and dividend, I believe that's staying the same. Whether they're sort of investing sort of elsewhere, I didn't really see too much, but yeah, $4.60 dividend. I expect if next quarter is as they say it is, they'll probably increase it again, because that's all looking pretty good. And balance sheet, sort of not really too much change for Broadcom. Cash sort of down ever so slightly. Debt broadly the same. Long-term debt down ever so slightly. Current debt is sort of a small amount coming to current debt. So they do run a little bit of debt, 38 billion. So yeah, not too bad. Can easily pay the interest off that, and with sort of growing revenue, that just gets inflated. But I always sort of prefer maybe a little bit less debt than that, especially at rates where they are. Although I think they've had this a while, so that is long-term debt at probably lower rates. But Aurelion Mining, I meant to say, assets wise, or balance sheet looking incredible, really. Cash is down sort of 15 million, but debt down even more. Current debt down 20 million to 12, and long term down from 52 to 31. So always like to see that, especially for a sort of smaller company. Don't really want to see too much debt, so was very happy with that. So I've been buying an awful lot of gold and silver miners and options on gold and silver miners, and I thought I would sort of show this chart. This is one that one of my sort of YouTubers that I watch, Francis Hunt, the market sniper and crypto sniper, very sort of eccentric fella, does sort of push his trading platform, which is rather expensive, so I guess he's inclined to push that. That's where his main revenue comes from. But he's a sort of big believer in the gold and silver ratio, in that in sort of bull markets, obviously this tends to come down. You sort of saw in the 2020 bull run, it sort of spiked up on the COVID crash and sort of came rocketing down when silver spiked up. So this does sort of happen. If you go back into sort of the 2011 bull market, again that sort of is in the the less hashed lines, but you can see it come right down into the 30s. So that means gold went on a decent run to $2,000 or $1,900, and sort of silver came right down, right up to $50 odd dollars. So yeah, the ratio sort of comes right down. At the moment, we are sitting at 80, and so it spiked up to sort of 125, come down to sort of 63 in peak silver times, and yeah, it's been sort of bouncing around this narrowing, very much narrowing wedge pattern, and sort of that they can go either way really, but sort of with 2024 expecting an awful lot more stimulus and money printing, sort of interest rate rises and debt has to be repaid, and sort of inflation coming down, kind of expecting interest rates to be cut, which is normally good for gold and silver. Or it's good for gold, and then silver sort of tends to follow afterwards. And if you sort of follow me, I'm also bullish on silver in particular for its sort of industrial use in solar panels and electric cars and that sort of thing. So I think it could sort of double up monetary demand with gold going up and industrial demand in sort of the green energy transition, basically. So yeah, I would be inclined for this sort of wedge to be breaking downwards when it does finish, and yeah, gold and silver to be sort of going up, but silver to be outpacing. So that's kind of my idea with the miners, and this sort of, obviously you can see this is almost sort of coming to an end. Whether it is going to sort of break out very soon, I mean the wedge basically ends at Christmas sort of January time, so kind of expecting it to sort of probably break before then. And yeah, if it does go to the downside, then basically silver should be doing very well. So I've been looking for miners with as much silver as I can. I am in sort of Equinox Gold, which is gold only, but they just look particularly good value. And then Coeur Mining has sort of been the one that I'm mainly looking at, with sort of 10 million ounces and a decent value. But also, as I say, KGHM, the sort of copper and silver miner. Sort of copper and silver both kind of go into the same bucket in the green energy side. They're both sort of used quite heavily. So yeah, I am still eyeing up KGHM, albeit I'd have to sell something and buy it in Interactive Brokers. But yeah, that's kind of the thesis on more and more gold and silver miners, and sort of why I'm kind of underperforming at the moment, because tech's going up and I'm sitting in gold and silver, which isn't doing a huge amount at the moment, but we'll see. So news-wise, it's been a bit of a mixed bag, but sort of fair amount of bad news, which you kind of see as good for gold and silver, really. The sort of bad news being meaning interest rates probably have topped, if not maybe one more rise, but I would kind of think topped, and the market seems to be thinking largely topped. And yeah, when you start getting sort of jobs data far worse than expected, the JOLTS job openings, they sort of use this as an indicator of the labour market, and that was sort of quite a bit worse than expected. You then had Wednesday, the ADP non-farm employment change. That was worse than expected and well down on the previous month. You had GDP worse than expected, 2.1%. This is sort of Q2, so it's up to June. It's quite old data, and even that's only provisional. So GDP very, very much lags. And then going into Thursday, you had European CPI was sort of core was in line, and headline was actually up. So not looking all that good for them. That is a provisional number. They actually release it during August, for August, so it's can be subject to change. Unemployment was sort of as expected, stayed the same. PCE, the sort of Fed's preferred inflation core, was sort of in line with expectations, and the headline PCE was sort of in line, 3.3% for headline. So it's getting towards 2%, although both were up for the month. But yeah, there's a few sort of bits that are feeding into that and coming down. And have to remember, Powell did actually say, I believe at the last FOMC conference, or maybe the previous one, that they would actually start cutting, or they expect to cut before they get to 2%. So it's not as if you wait until it drops to almost nothing and then start cutting. He did say they would expect to start cutting before they get to 2%. So yeah, and then we got a bit of UK news. I keep sort of thinking the housing market is kind of doomed with rates as they are, and sort of us not being like the US, people coming off their mortgages and being forced to remortgage or just go on a standard variable rate and take the hit. So yeah, the housing market worse than expected, 0.8% down for the month, and now over 5% according to Nationwide down on the year. But I would expect it to be a fair bit worse than that before long. So yeah, the non-farm payrolls was actually better than expected. The ADP one was worse, but it's not exactly a huge beat. 187,000 jobs, and sort of private and government and manufacturing all beat. So it was very positive from that side. But unemployment spiked up to 3.8%. So this sort of come up and then come down again to 3.5 and was expected to stay there, but it's spiked up, so that's a little bit unusual. You did have I think Labour participation rate was ever so slightly up. That might sort of contribute part to it, but yeah, a little bit of a mixed bag on those numbers, but the market hasn't sort of really thrown a hissy fit or anything just yet, so we'll see what more news comes out. So portfolio-wise, all sort of fairly quiet. As I say, I did make a sale of Porsche. Been wanting to, as I say, go a little bit heavier on the gold and silver miners, and so it's not actually in here anymore. It's in Interactive Brokers, but I did make that sale of Porsche. Said that it would be either that or the emerging markets ETF. I am somewhat bullish on both, but just kind of think the potential return with the options is there for the taking. So I sold £2,000 worth of that, and it's sort of gone into a few options, but I still have about £2,000 in cash. I did have some left over, so yeah, it's down to 2,000 where it was about 2.5. And the Trading212 ISA is down because Bitcoin is been having a bit of a rough time. So CleanSpark dropped Gold and silver miners, even though gold and silver are doing reasonably well over the last month, the miners still are struggling. So Equinox sort of down 2.77% on the Friday, and has been sort of was above $5 and has sort of come right back down again. Coeur Mining at 241, which is sort of very surprising, but that means I've been stocking up on the options. Whether this is sort of going to be a horrendous move, I'm not sure, but yeah, we'll have to see. REIT's not really moving a great deal. And then, yeah, the IG side is sort of basically as is. As you say, Clean Spark down, Pan American Silver down with the other miners. And, yeah, Chinese tech sort of meandering around. Baidu sort of doing a little bit better than Alibaba recently. Not just on the day, it's sort of been a little bit of a trend. And as I say, more options. So got quite heavily more into Coeur Mining. I think I had 52 contracts on them at sort of various expiry dates. Sort of some are January 2025, some are December 2025, and yeah, back up to 68 contracts now. So that's quite a large position. Haven't bought any more Clean Spark. I kind of think that could come down a little bit more maybe, and they're still above my average price. So kind of think if we get one more drop down, you know, Bitcoin could go to sort of $20,000 quite easily, and then still go on a massive bull run. So yeah, maybe wait for that to come down a little bit. Would be hoping if it does, sort of, if Bitcoin went to 20,000, Clean Spark might go down, and they might have to issue shares or something. So if they sort of need a little bit of money because they've got a lot of liquidity, so that would hit them. But yeah, I'd still probably be looking to buy some options. And yeah, up to 31 on Equinox, a few more added there. None to Fortuna, but I did buy 3 more Himax. So Himax kind of think could get hit. They do a hell of a lot of business with China, and China are sort of wobbling at the moment, maybe having a bit of a recession. So yeah, I kind of expect Himax could get rather whacked. But yeah, I'm sort of edging in. You know, it's the smallest option position, but if it does play off, these could be extremely profitable. You know, sort of with the January 2025 ones, if Himax does sort of as well as I think it could do, maybe later half of next year, you know, you could easily be looking at 10x, 15x your money. So, as I say, compared to like the emerging markets ETF or Porsche, I just see more potential here. And obviously the options are still, you know, under $5,000, so it's like 2% of my portfolio. So if they all went to zero, you know, it'd be annoying, but it wouldn't be the end of the world. So yeah, that's the portfolio for the week. Let me know your thoughts in the comments, and if you're buying anything, and like and subscribe. See you soon.